How did the U.S. get out of the last Great Depression? Well, let's apply the lessons we learned then to today's situation and discuss what's coming up for our economy. Our guest today is George Selgin. He is a senior fellow at the Cato Institute, professor emeritus of economics at the University of Georgia, the author of several books, including The Menace of Fiscal QE 2020 and his upcoming book, False Dawn, The New Deal and the Promise of Recovery. Welcome to the show, George. Good to see you.
Nice to be on it, David. Nice to see you again.
Your work has appeared frequently on mainstream media, including the Financial Times and Wall Street Journal. But I'd like to talk about your upcoming book today. So, in your book, you've documented how the U.S. got out of the last Great Depression. To what extent the Great New Deal had a role to play in that? Walk us through some of your findings.
Well, it's very interesting that nobody really has a book just talking about how the U.S. got out of the Depression and what role the New Deal played. And having studied both questions for a long time, I realize that people have a lot of misconceptions about what happened back then. And since they're always bringing up the Depression and the New Deal whenever a new crisis hits and we find ourselves in another recession, it's important to separate myth from truth. So some of the things I found will surprise a lot of people. In particular, today, when we think about getting out of a recession and the role of government, it's almost always a matter of thinking about expansionary monetary and fiscal policies or stimulus. In fact, if you go back to the 1930s, there wasn't much of either, certainly not by modern standards. And that's one reason, not the only reason, why the recovery took so long. I should say that the U.S. didn't really get out of the Great Depression until after World War II, not during, because during World War II, of course, temporarily we were out of it. There was no unemployment because of the draft, the war and the draft. And of course, the factories were busy producing munitions and all that. But the real question, the real challenge of recovery was getting the economy not to go back into a depression after World War II ended and the government stopped spending the vast amounts it had been. Anyway, my book explains exactly what the changes were that finally allowed that recovery to take place. But in the meantime, during the 30s itself, there was very little fiscal stimulus, very little monetary stimulus. Instead, there were a lot of other New Deal policies, many of which did a lot of harm. So my book talks about those. It also talks about some good things that took place during the New Deal that mostly had to do with helping people who were saddled with a lot of debt and having the government assist in taking over some of those debts and becoming responsible for it. So there was good stuff. There's a lot of bad stuff, but there wasn't the fiscal and monetary stimulus to any great extent that we think of as recovery devices today. One more note on that, David. I misspoke a little bit. There was monetary stimulus, an important sort of monetary stimulus, but it's not the sort we think about today because the Federal Reserve wasn't really behind it. It was just putting up with it. And then it even tried to stop it. And that stimulus came starting after the devaluation of 1934 in the form of tons of gold that started coming to the United States from Europe and elsewhere, but especially from Europe. And that was because, ultimately, mainly because of war jitters in Europe, among other factors. So all this gold coming in did provide a sort of monetary stimulus, but the Federal Reserve was not responsible for it. And at one point, starting in 1936, it actually tried to put an end to those or to halt the effects of those gold inflows with rather unfortunate consequences. So anyway, those are some points. It's a big, long book, and I probably already said more about it than you want to know.
Well, no, it's very interesting. I actually like to delve into the details a bit more. You know, I read in history books that World War II, the onset of World War II, was the major impetus of bringing the U.S. out of the Depression. Is that correct?
It is and it isn't. It's certainly true that once, even before the United States entered the war, the fact that war had broken out in Europe led to a tremendous increase in European demand for armaments, which US manufacturers were more than happy to try to meet. So we started even before Pearl Harbor to lift out of the Depression. And then, of course, afterwards, the vast increase in military spending and the draft that went hand in hand with it, both of those ended the symptoms of depression, or the main ones, so far as the wartime, so long as the war lasted. But after the war, what people often forget is government spending as a percentage of GDP on all levels, state, local, federal, it went right back down, and very quickly. So a lot of people predicted at the time, a lot of economists, that we'd plunge back into the Great Depression again, that the war would just have been an interlude between two depressing acts. And that didn't happen. So I argue in the book that in order to understand what really ended the Depression, you have to understand the changes, subtle changes that took place during World War II that had permanent consequences, unlike the war itself and the military spending, which ended. And the book goes into what those were. What were the things that went on during the war that allowed for a prosperous post-war economy? That's the true answer to what ended the Depression. The answer can't be World War II, because that didn't last, fortunately. And the answer certainly wasn't the New Deal, because when the New Deal was effectively over by the end of the 1930s, the US economy was still very deeply depressed.
We're going to talk more about sound money and what Professor Selgin believes could be sound money. But first, a word from our sponsor, I Trust Capital, an IRA that offers 35 crypto assets and the lowest trading fees in the crypto IRA space at 1%. Well, some people believe Bitcoin is sound money, and we'll talk about Bitcoin later in this interview. And Bitcoin has certainly done well this year. So if you like to park your Bitcoin returns in a safe IRA, consider I Trust Capital. Again, lowest trading fees in the crypto IRA space. If you use my link down below, iTrustCapital/David, you'll get a $100 signing bonus when you sign up using that referral link. Now, if you're over 18 and you like to open a new account or roll over an existing account, you can do so. Use my link below, find out more. How did the wartime economy transition into a peaceful economy, whereby the factory workers, workers in industry, still had jobs after the war?
That's the $64,000 question, David, because as I said, a lot of economists didn't think that would happen. They believed that the government had to up its peacetime spending in order to prevent mass unemployment from resulting from demobilization, because you had all these soldiers coming back and quickly. But in fact, the government didn't do much. They had some things like the GI Bill that put some former soldiers to put them in universities, that sort of thing. But for the most part, the government applied shock therapy. It cut back its spending. It didn't create any major job programs. And it shut down almost all the wartime factories. I mean, it really shut everything down. So all the people who had been in those factories were deprived of their jobs, and all the soldiers coming back from Europe needed to get jobs. What's amazing is the unemployment rate didn't shoot up. Instead, all these people found peacetime jobs very quickly with very little government support. There was some, but not that much. And the only explanation for that is private investment took off. It absolutely took off. It had been stagnant throughout the 30s, even negative in net terms. That is, we had capital consumption in the 30s. Private investment took off like a rocket after the war, and so did personal consumption. But private investment was really significant because it had been stagnant, and you needed to rebuild the capital stock. I argue in the book that the reason private investment took off was, first of all, you didn't have the drag on economic activity you had in the 30s from a total lack of spending. But more importantly, you didn't have the drag that came from hostile government policies, because by the last half of the 1930s, New Deal policies had become very scary to businessmen, very oppressive. And uh, and what the war did was to change the attitude of government to business. It made for a more cooperative relationship between the two, which survived the war itself. And at that point, you not only had the preconditions for recovery, which had kind of been in place ever since they stabilized the banking crisis in 1933, but you also had an environment conducive towards business investment where investors, businessmen were more confident in the future and less fearful of confiscatory government policies that would deprive them of their profits. There was a lot more certainty as well. By the way, less people should conclude that I'm offering a conservative or at least a radical free market view here. John Maynard Keynes also had a similar diagnosis, at least during the 30s, during the New Deal. He was very critical of government policies, of New Deal policies that scared the pants off of businessmen. And he argued, as many others did, that these policies were holding back recovery. So, very briefly, changes in attitudes about government relationship with business, the need to cooperate with business to get the war uh, to enhance wartime production, led to permanent changes in government business relationships that sort of swung the pendulum away, far away from the New Deal, from hostility to
Right.
almost too close and too intimate relationships between the two.
You said that there wasn't stimulus during the Great Depression or following the Great Depression, or at least to the same extent that we saw in recent years. However, the fiscal deficit as a percentage of GDP was at a national record at the time in the 40s, reaching negative 25% of
Yes,
GDP at
that's
one point.
during World War II.
Yeah.
Yeah, fiscal stimulus. When I said there wasn't much fiscal stimulus, I meant during the New Deal itself.
Oh,
That
I
is
see.
just
Okay.
1930s.
Okay.
There was, you know, Roosevelt spent twice as much as Hoover, and Hoover had spent twice as much as anyone before.
Yeah.
But if you look at those levels of government spending back then relative to GDP and compare them to today's, it's not very impressive at all. And the other thing that's worth keeping in mind is that during the New Deal, although government spending went up a lot, relatively speaking, they also raised taxes quite a lot, including a lot of highly regressive taxes. And so the actual increase in deficit spending, which is the sort that's supposedly needed to really goose the economy, wasn't that impressive. The one year in which the New Deal had a very impressive fiscal deficit, uh, and more impressive than any under the Hoover administration, was 1936. But that was because of a veterans bonus bill that Congress passed that year, a very expensive measure that Roosevelt actually vetoed, but Congress overrode the veto. Roosevelt himself was very fiscally conservative, especially before 1938 when he loosened up a little bit after the downturn of 37, 38. Roosevelt had been very insistent on trying to balance the budget as much as possible while still providing for emergency programs for relief. So he did not share the beliefs of most modern economists that deficit spending per se was something that would help the economy get out of the depression. He didn't believe that at all.
Do you believe, generally speaking, that there should be stimulus from the government to take us out of any sort of economic calamity, whether it be a recession, Great Depression, or a war?
I do and I don't. And let me explain what I mean by that. Uh, the proximate cause of depressions like that of the 30s is a collapse in spending. Of course, there's more to it than that, but the immediate proximate thing that goes haywire, and this happened again in 2000, 7, 8, and it happened in COVID, is a collapse in spending. Ideally, we don't want spending to collapse. People can't pay their bills, businessmen can't recoup, and women can't recoup their earnings, and so they lose money. Total spending, because total spending pays the bills, right? Ideally, we wouldn't need to have any government action. We would have a system where spending was kept on an even keel automatically. For example, if people tried to hoard money, we'd have a banking system that would just make that many more loans, and the total flow spending would be maintained. That doesn't happen for all kinds of reasons, a lot of which have to do with the kind of monetary system we have and the role of central banks in it and all that. So, for better or for worse, we have occasions when nothing except government action, including and perhaps just consisting of uh, the easing of monetary policy by central banks, is going to keep spending from collapsing. So, because of that, I think that it is desirable to have uh, at least have a monetary system where if we have a monetary system run by central bankers, we want those central bankers to manage it as if it were an ideal monetary system, or to come as closely as possible. And that means not letting spending collapse. On some occasions, when the monetary authorities prove incapable for one reason or another of keeping spending from collapsing, there's a case for fiscal action
Okay.
to accomplish that goal instead of monetary policy or as a supplement to monetary policy.
I've heard one argument for the cause of the Depression, which is the Great Depression, which is the implementation of the Smoot-Hawley tariffs. Just generally speaking, protectionist measures pushing the economy into a contraction. And the same argument applies to today, whereby some people think that we're seeing less globalization and more protectionism all over the world, not just in the US, which is a precursor to another sort of global economic contraction, depression, whatever you want to call it. Can you evaluate this parallel?
Well, I don't want to go too far trying to decide how close we are to a situation like the one of the 30s, partly because the Smoot-Hawley tariff effects are very controversial. Economists still can't agree how important Smoot-Hawley was. I think it probably was very important because I think international trade, even if the statistics suggest that it's a small part of GDP, there are repercussions to cutting back dramatically on international trade for productivity that I think are easily underestimated. So I tend to sympathize with the view that Smoot-Hawley was an important factor in the crisis of the 1930s, uh, in addition to the monetary collapse that partly was independent of it, though it may have aggravated that collapse. So I think Smoot-Hawley is very important, but because it's so controversial, it's awfully dangerous to speculate about just how much today's conditions that resemble Smoot-Hawley, that is the deglobalization or the general tendency for economic cooperation to uh, deteriorate because of wars and other factors. It's very dangerous to risky to try to speculate about whether that's leading us into anything like another depression. Certainly, I don't believe that the Smoot-Hawley affair alone was responsible for the severity of the Great Depression, but I'm prepared to say that it was an important factor. Uh, I don't see conditions today as of any sort suggesting that we're on the precipice of a similar, looking down at a similar collapse. I don't see anything that dire in the cards, but I do worry about uh, the global political situation because a great deal of political unrest is always a potential backdrop for bad economic policies.
Sorry, what political unrest are we talking about?
Well, I'm generally speaking about the extreme bipolarity
Hmm.
of politics today, and the fact that we seem to be losing the median voter, so to speak. The old median voter model, as you know, was one in which the main political parties tended to gravitate toward the middle to split up a normal distribution of votes. And now we seem to have bimodal distributions popping up everywhere, and everybody's extremely unhappy about results that don't go their way. And this is not a happy situation. It's not happy culturally. It's not happy in the policies it results in because you have candidates competing by being extreme instead of by trying to be conciliatory and moderate.
During the pandemic of 2020, there was a brief period in which the unemployment rate spiked to double digits, which was comparable to the Great Depression. Of course, this didn't last 10 years. It was only one or two quarters.
Right.
But we saw
Yes.
a taste of that. You don't think that could, I guess, either come back or become a longer term trend, Professor?
Oh, of course, it's always possible to have a crisis that gets us back to double-digit employment for a time. I certainly don't think there's tr any reason to think there's a trend heading that in that
Okay.
direction. It would take a combination of unusual circumstances, as the last crises have, to get us into that kind of fix. But it's also important to put things in context. You're right. The unemployment rate, I think it was in October 2000, I think it was October 2009, where it went up to over 10%. Anyway, that was the limit. And uh, it's important to recognize that in the Great Depression, the unemployment rate was not only double digit for the whole 30s, but it was in much higher double digits. In fact, at the end of the 30s, 1939, the unemployment rate was higher than it was at the peak of the 2000 post 2007 Great Recession. So the Great Depression was far, far worse, not only because it lasted longer, but because unemployment was much higher throughout the entire event.
What is your view overall on the labor market today? We're close to 4% unemployment. Obviously, we're close to the double digits we were talking about. But do you see any further deterioration in labor market strength in the U.S.?
I don't think that it's necessary that markets should deteriorate anymore. 4% is not a very good number, but it's not horrible either. Much depends on, labor force participation, which is itself quite healthy right now. It wasn't for a long time. But I don't see any reason why the labor market has to continue to deteriorate. I do think that uh, I think it's important that monetary authorities keep a lid on inflation, but I don't think that their doing so necessarily has to make the unemployment rate any worse. During the debates over the last couple of years about uh, Fed policy in particular and unemployment, I was one of those who insisted that the Fed was perfectly capable of helping bring the inflation rate down without generating any huge increase in unemployment. And that is, in fact, what has happened. Now we're seeing some increase, but we also have a much lower inflation rate. I don't think that things are out of control. I'm guardedly optimistic that the Federal Reserve's policy will be such as will not cause unemployment to have to get much worse. We will have more recessions, of course. We're never going to not have recessions, as far as I can tell, but I don't see anything very severe in the offing.
People have often told me that they're concerned about their purchasing power being eroded away by monetary stimulus or perhaps even fiscal stimulus. They're concerned about inflation, even though inflation has come down. And they think that one alternative or solution to this problem is to invest in alternative currencies, calling it Bitcoin or gold, or whatever option you have, something that is not fiat. What are your thoughts on this?
Well, my thoughts are simply that Bitcoin it's not unreasonable that people should include Bitcoin and other cryptocurrencies perhaps in their investments, partly as a hedge against inflation. It has shown its merits as such now over a fairly long period. I'm not an investment advisor, mind you, and my investment advice, if I do seem to give it, isn't necessarily worth anything. But I don't think it's unreasonable for people to think of Bitcoin that way. Indeed, as far as I'm concerned, Bitcoin is much more an asset for investment than it is a currency. Although people call it currency, it doesn't really serve in exchange very much. A very, very small quantity of exchange activity is conducted using Bitcoin. Where Bitcoin becomes important as a medium of exchange is in assisting people with transactions, including getting their money from their savings from one place to another, despite oppressive government laws. Now, that can mean using Bitcoin and things like it for illegal activities, but I think the more important point is it can also mean that these currencies, these cryptocurrency and Bitcoin, can also be very useful in helping people protect their wealth and get it away from the grasp of government authorities and protect their general freedom that way. This is, I think, where Bitcoin really has its role to play, positive role to play in world affairs, not as a medium of exchange that people are going to often use to pay for groceries and that sort of thing under ordinary circumstances.
Okay. Do you have similar views about gold?
Yes, I do. Of course, they each have their own distinct advantages and disadvantages. Bitcoin's advantage is that as a virtual medium, it, no one has to actually worry about hiding, storing, moving, or mining, not mining from the ground anyway. That's this currency. Uh, and It can also provide other advantages compared to gold. It's not subject to the supply shocks gold is subject to that extent. There's a little less potential volatility. On the demand side, on the other hand, Bitcoin is still an upstart. And so the demand is much more capable of fluctuating. It doesn't have any non-monetary demand that tends to pin it down. So it's an interesting alternative. My guess, though, is that most investment advisors would say that you might include both of those things in a good overall safe portfolio with a particular emphasis on hedging against the depreciation of government paper currencies. So, but they all these alternatives have their role to play. They might play bigger roles, and that's why I'm quite uh, in favor of governments doing all they can to allow these currencies to uh, do as much good as possible, which includes giving people the freedom to use them to good ends that they need. And I, of course, am against governments trying to oppress cryptocurrencies, including firms that want to deal in cryptocurrencies by not letting them take part in important parts of the payments infrastructure. Of course, I'm thinking here about things like the Federal Reserve's refusal of a master account to Custodia, an entrepreneurial bank that is trying to uh, be part of the US payment system, but also deal in cryptocurrencies. I think there's a very important need for such institutions.
Well, I'd like to finish off by talking about the Great Depression once more, come full circle. So you mentioned earlier that we're unlikely to enter this phase again. And actually, if you take a look at prior stock market crashes, 2008, for example, 2001, even to some extent 2020, it wasn't followed by a 10-year Great Depression. So what is it about our economy today that makes, I guess, people and markets overall a little more resilient to stock market crashes, such that we don't have or we will not likely have another, multi-year stagnation or Great Depression, whatever you want to call it, if the stock market corrects another 50%, like it did in, 1929, where it was more than, 50% in 1929, but you get the point.
Well, I think that it's not so much that things have changed. I think rather that the fact that there was a major stock market crash in 29 and that a major depression followed it is to some considerable extent a coincidence. That is, that we didn't have to have a Great Depression just because the stock market crashed as badly as it did back then. Other factors were to blame for what subsequently happened and for the very deep, deep, deep downturn in real activity that took place, particularly among those other things was a collapse of the US banking system, quite separate from the stock market collapse. And by the way, the banks weren't failing because the stock market collapsed. Most of their problems had to do with lending to farmers. So quite different thing. There was one famous, infamous bank, the Bank of United States, that was said to have gotten in trouble because of dealings in securities, but its problem was dealings in Manhattan real estate, not securities. So it's actually hard to find banks that failed because of the stock market or anything much to do with it. So you had many other problems and worldwide problems that were behind the Great Depression. The stock market crash provides a useful date that people like to say marked the beginning of the Great Depression. What it doesn't do is to provide much in the way of a useful explanation for why a Great Depression eventually took place.
Yes. And you think overall, though, our economy is more resilient today to macro shocks than in 1930?
My gosh, it really ought to be.
Okay.
We have by all ordinary reckonings on what makes an economy more stable, we should be more stable. For one thing, and I'm going to sound very Keynesian here, but it's true. Governments are not cyclical organizations, so government spending tends to be if anything, counter-cyclical. And we have a very, very large government sectors now relative to GDP. So that fact alone should mean that we have less severe cyclical ups and downs than were possible back in the 30s or before. It doesn't mean there isn't a downside to big government because it means your overall productivity is probably not what it ought to be. But at least as far as stability is concerned, large government sectors, most people would agree, should mean more stability. Our economies are also much more diverse today. One of the, as I suggested in discussing the 30s, particularly in connection with the banking crisis, a lot of the problems back then were agricultural. U.S. agriculture had been in bad shape ever since after World War I. During the war, there was heavy investment in uh, cultivating crops and all that to feed the troops overseas, European and American eventually. Afterwards, there was a big crash. And the farm sector never recovered, and it was a big part of the whole US economy back then, much bigger than it is now. So we could never have agriculture, as important as it still is, being that as crucial in the overall stability of the U.S. economy, as was the case way back in the 30s. We're much, much more diverse. Of course, we're diverse internationally too, and that's why I worry that I think that our economy is more connected to the rest of the world. That has both good and bad aspects because it means that we're more exposed to bad things that happen in the rest of the world, but we're also generally more diversified. And in principle, that should mean particular shocks don't do as much harm as they might.
We're entering an area, we're entering an era in which computers are expected to surpass human intelligence for the first time ever. So for the first time in all of human civilization, we're now encountering an entity that is as intelligent, if not more so than ourselves. And people have different definitions of intelligence. Is this stabilizing or destabilizing for the economy?
Oh, now you really got me going on a speculative limb. I'll just say for starters that uh, uh, I'm cynical enough to think that the reason computers are catching up with human beings is partly because human beings have been slowing down. But in any event, the the repercussions, the potential repercussions of AI are really quite difficult to ponder. You can imagine all sorts of good things going on, but you can also imagine plenty of bad ones. Like many technologies, the potential for both harm and good are very substantial. I think it was Alfred North Whitehead that said that society advances as society advances, it becomes less and less necessary for people to have to think about stuff. And if that's so, that is, if not having to think about as much is either a symptom of or a cause of progress, as Whitehead suggested, then AI should be pretty useful, pretty beneficial, but I'm not so sure. And a lot of people aren't so sure. But I have no expert opinion on this, David. I'm just an economist, and I have to confess, I haven't even played around with ChatGPT yet. That's how unengaged I am with this whole thing. I'm still working on I'm still, writing footnotes and doing research the old-fashioned way and hoping that my book will come out before a computer writes a better one.
I'm just looking forward to the day where a robot interviews you. You're having this conversation with the chatbot, and
Yes, well, when that happens, my robot will be the one that signs off.
yeah, it'll be a robot interviewing robot.
It
I'm
reminds me of a joke people used to tell about a professor. A professor decided he would record all his lectures so he wouldn't have to attend class, and he would just go in at the beginning of class and set his tape recorder on the podium. One day he decided he'd walk by and check on how the class was going, and he looked and he noticed that all of the desks, there were no people there. Every desk had a little tape recorder on it. So you had the students tape recording, the tape recorders recording his tape recorder. Anyway,
I'll just finish off here. The global population is expected to decline. The fertility rate in most developing countries is going down. Perhaps machinery and AI is one way to fill the gap in the shortage of workforce that we will inevitably have.
yes, well, I will say something about that. This is something I've thought about, and that is that the technology never displaces workers in the sense of that will cause unemployment. Things like AI are used to replace regular people when when regular people become too costly and when it becomes the more economical alternative. But that simply means that's just another way of saying that if there are enough unemployed people around, then they'll get cheaper and the AI won't necessarily compete with them. This is why we find automatic checkout is popular in places where wage rates are very, very high, but in places where they're not, you still have people who will check you out of the grocery store. So technology doesn't just swoop in like manna and drive people out of work. It is adopted when it is a more economical alternative.
Okay, George, very good conversation. Thank you very much. Where can we follow your work?
Oh, I suppose just generally online. I am on Twitter where I get in arguments all the time, and occasionally I will advertise my work there. Otherwise, well, programs like yours help, but also in general, if people search on Google, they'll find whatever I'm up to there.
When can we expect your book to come out?
That will come out around this time next year, I'm told. The publication cycle is such that they didn't want it to come out this fall. They think it's not going to be quite on time. So we have to wait till the next big push, which apparently comes in late spring, early summer
I didn't
2021.
realize there were I know nothing about the book publishing
Yeah,
industry, but I didn't
it's
realize there were
cyclical. It's
seasons.
cyclical.
Okay.
There's a big one in the fall, and then the next one comes in late spring, summer of the following year, and so on. And you don't want to go in, you don't want to come out with
Hmm.
a big book during the intervening period because of Christmas and other things that could prevent it from getting as much attention.
I learned something
I
about the
think,
book publishing industry today. All right, interesting.
yeah,
Okay.
yeah.
Thank you very much. Well, we'll put the links to your social media down below, so make sure to follow Professor Selgin down below. Thank you very much. We'll speak again soon.
Thank you, David. Take care.
Yeah, thank you for watching. Don't forget to like and subscribe.